Yo guys, what is going on? It is your host BK with Let's Become Billionaires, and today we're going to be talking about how I made 120 grand in my portfolio by the age of 19. So I hope you guys are ready. We're going to go over my 5 biggest positions so you guys can learn about what kind of stocks I'm into, how I invest, and how I look for companies. From there, I'm going to give you guys 3 tips on what you can do to find better stocks and become a better stock picker. And finally, we're going to end with my goals. So I hope you're ready, guys. Let's get into it. Ladies and gents, I hope you're excited. We're going to go over my 5 biggest positions in my portfolio. We're going to go over the percentage of the portfolio they make up, and then we're going to give a brief summary of why I like the stock so much so you can get an idea of how I think. So guys, the biggest position in my portfolio is going to be Tesla stock at 21% of my portfolio. Then it's Planet 13 at 16%. Then it's Celsius stock at 11%, Skyworks Solutions at 4%, and then also Square at just over 4% of my portfolio. So guys, let's start off with Tesla stock. Tesla is awesome because it has so many businesses that it has yet to enter. However, these businesses are almost guaranteed successes given their incredible integration and business ecosystem. So guys, let me give you an example. So Tesla has a Tesla insurance product, and this insurance product is superior to every other insurance product because Tesla has data on how a driver drives. They have cameras all over the car, they have great AI, they have great systems and software to be able to collect data on your car and see how you drive. So if you drive recklessly, they could charge more that month that you drove recklessly. If you drive safer, they could charge less. And for that reason, Tesla insurance is almost a guaranteed success. And yet, whenever I hear a bear talk about the stock, I almost never hear them bring up Tesla insurance. The reason Tesla's stock price was so low was because nobody noticed the innovation and the platforms that they were building on that haven't matured yet. Once they mature from their infancy, you're going to notice the stock price rise, and that's kind of what happened with Tesla. Now, I still think Tesla's a long way to go because it's overvalued in terms of the car business. However, they have so many other businesses they're going to get into or that are going to grow. For example, solar, energy storage. We have auto bidder software to redirect energy to make consumers a profit. If you don't know anything about that, I made a video on it. I'll link it above right now. They also have implied that they're going to get into electric airplanes, HVAC systems, cargo ships, trains, semi-trucks are still coming out, roadsters, and they're going to be lowering the price of their cars to an even lower price. They might be able to make a Tesla app store on their cars, and when they get autopilot, they're able to remove pedals, steering wheels, etc., and this will increase the margins of the car by a lot. Next, guys, let's look at Planet 13. Now, Planet 13 is a cannabis stock, one of the best marijuana stocks to buy in 2021, one of the best growth stocks for 2021 in general. And the reason I like this stock so much is because it was trading at a $3.44 per share target. At this point, the price to sales, which is the price you pay for the entire stock divided by its revenues per share, was only an 8, guys. Now, an 8 is really, really low given the fact that in 5 years, the company had a goal of opening up to 8 superstores. Now, I did a very simple projection that if their superstores each sell the same amount in terms of revenue, that means that in 5 years, they will 8x their revenue. Well, if their price is 8 times the revenue right now, and they 8x their revenue in 5 years, that means the forward price to sales is a 1. And this is with a simple projection that they don't have any same-store sales growth, they don't get any e-commerce, they don't expand in terms of dispensaries or wholesaling or anything like that. This is just from their superstores. Well, in that case, guys, the price to sales is going to drop to 1, and that makes it extremely undervalued because it's still going to be growing. Lots of states to go to, has 49 other states to go to, has international markets it can expand upon. So the fact that it's trading for so cheap, I poured in. Finally, guys, let's take a case study of Skyworks Solutions. I love Skyworks Solutions. It's in my portfolio because it's innovative and because people aren't understanding its future. So Skyworks Solutions had a big price dive in 2018, and the reason for this was because they were scared of iPhone sales declining. And Skyworks Solutions is a supplier of chips for the iPhone. Now, with 5G, Skyworks was able to sell their chips for a lot more than in 4G. Now, what's great, guys, is if Skyworks Solutions charges more per phone, and if 5G is going to increase iPhone sales, which I believe it will, then not only will Skyworks get extra revenue from 5G, but it will also get extra revenue from iPhone sales increasing. And for that reason, guys, I bought Skyworks. I put a lot of money into it because I knew it was going to grow into something big once I realized the opportunity here, and once I realized analysts are playing dumb for thinking iPhone sales are going to continue to go down even when 5G comes out. All right, guys, let's jump into the tips. So tip number one is going to be to analyze the margins of a business. And this is very, very important because people don't often do this. What people usually do is they look at a main business segment that a company performs. They see it might be declining or stagnant or growing very slowly, and then the stock price drops, not noticing that other businesses are replacing that business segment. Let me give you a great example. Apple stock in 2019 dropped because of the iPhone stagnation going on. Now, their iPhone sales were in fact stagnant. However, people did not realize that their other businesses had higher margins, which means that they make more money per dollar in revenue that they get, and they were growing a lot faster. So in essence, guys, as the iPhone business was dropping by 1% a year in revenues and in volume sales, I looked at the services. The services was growing by 20% a year at that point, year over year, for multiple years in a row. And that revenue had a 66% gross margin compared to the 33% gross margin on the hardware business side, which includes the iPhone. So in other words, you're getting double the margin with a 20% growth while the iPhone is declining at just 1%. And for some reason, people were getting their hair in a spin, their panties in a twist over the iPhones. And I said, I do not care. These people are stupid. Usually when you say to yourself, these people are stupid for bidding the price down, that's when you buy. So I did. And I said, hey guys, listen, I'm going to buy this, go all in. And voila, that's exactly what I did. Tip number two, guys, is to look for companies that are either entering or that are already in businesses that cannot really be projected. I'm not going to spend too much time on this as I've already talked about it when I was talking about Tesla. But the point is, if you understand that there are opportunities for business besides the ones that they explicitly state, then you can predict where they're going to go into the future. And if you predict where the stock's going to go, where the stock market's going to go and all of that with that particular stock because of the businesses they're entering, you can buy that stock well before anybody else is aware. So always when you're looking at a stock, especially an innovative company, you want to ask yourself, what are they going to be doing? What technologies do they have? What do these technologies give leeway to? What have they implied? Really look into the words of the management team because managers aren't allowed to lie. CEOs aren't allowed to lie per se. So they're going to really fumble their words around so that they might be able to hint at something they're doing in the future, but they don't explicitly say it. So you really want to look at things like that, signs like that, and that's where you really want to make a lot of your money. This is probably the biggest tip along with the margins on how you can make good money on stocks. Tip number three, guys, and this is a tip that you could take it or leave it, and I'd rather people leave it if they're unsure. I got a lot of criticism on this tip in my previous video, but I'm going to say it anyway. Do not, for the love of God, diversify your money if you know what you're doing and you can take the risk of that money. I do not diversify. Tesla's 21% of my portfolio, Planet 13 is about 17, and then Celsius stock is 11. That means if you add up those stocks, 21 plus 13 plus 11, that comes out to 14, 25. That's about 35% of my portfolio in just those stocks. The reason I don't diversify is because I trust myself and I don't really need that money right now. So I'm willing to take that extra risk for extra return. This has helped me a lot. This has helped me tremendously. It's helped me bring my portfolio up to the 120 grand that it is at now. And honestly, I recently just started to diversify less. So if I had done that from the very beginning, since I knew which stocks were going to perform the best from the very beginning, I would have made a lot more money. But unfortunately, I decided to over-diversify. Now, that might be a good strategy for you to diversify, even though I'm telling you not to, because you might not trust yourself, you might not be able to take that risk, you might have family, you might have debts, you might have to pay for college in a couple years. That's perfectly fine. Do not risk it. Do not take this tip if it does not suit you. This is advice for people who really want to make it rich and who don't have a lot that they're putting at risk. Alright guys, so now let's go over my goals, how I plan on measuring that goals, and donating my money. So my goal is to become a millionaire by the time I'm 23 or 24. Now, the reason I think this goal is possible is because of how I measure my goals. Okay, and this is obviously only financial goals. Okay, I have a lot of life goals that are not money-based, but financially speaking, I want to be a millionaire. How do I measure that? Now, right now I have 120 grand in my stock market portfolio. I also have a couple grand in Bitcoin and a bunch of other investments, but for now, let's just talk about the 120 grand. Now, a lot of people measure the distance between their goal and what they're currently at. This is an incorrect approach, and I want to explain why, because it's actually very important for your mental state and your motivation to measure your goals correctly. Now, in business, with things that grow exponentially at least, and with finance, you want to measure your goals in such a way that it can exponentially grow. So for example, when I look at my $1 million goal that I have, I want to look at where I'm at now, and I want to double multiple times to see how many doubles away I am from being a millionaire. If I double 121 times, then it's 240. Then from there, it's about 500. And then from there, it's a million. So I'm about 3 doubles away from becoming a millionaire. The reason this is important, guys, is because usually the reason you're not at a certain point already, or the way you can get to 1 double further in terms of your success, in terms of your finance, in terms of your business, is by cutting back and becoming more efficient. So for example, when it comes to money, maybe I just need to cut back some of my spending. Maybe I need to cut back on coffee or Coca-Colas or whatever it might be. And if I cut back on that, next thing I know, I'm saving about 15-20% more. When I invest that 15-20% more and it grows, next thing you know, I've doubled my worth simply by being smarter about one decision and being more efficient. Then next thing I know, I can double my income by maybe working an hour longer every single day, or maybe getting a side job or a side hustle, right? So you want to add these incremental improvements that help you almost double your money or double whatever your metric is every single time you improve. And so with that being said, guys, let's talk about charity, because that's one of my goals as well. I don't like to spend money. I don't like to give money in general, unless it's giving money to a cause that actually matters to me or to somebody else, or I can put a smile on their face. Usually, I think Elon Musk said this. I might be wrong, but Elon Musk, the best inventor in the world, the most important person to humanity right now, he literally said, you feel lonely if you don't have somebody to share your successes with. And that's Elon Musk saying that. So I said, hey, you know what? I'm going to take a page out of his book. I'm going to start donating some money. Now, the way I started donating money or spoiling myself or whatever it might be is every time I reach a milestone, the next $1,000 or $2,000 that I make after that milestone, I'll either donate it or whatever it might be. It gives me a lot of ecstasy because I actually feel pride in achieving my goals, so it influences me to make more money, but it also gives me that pride of donating and sharing that goal with somebody else. And so when you share that goal with somebody else, whether you know them or not, maybe you donate to a hospital or something like that, and you don't actually know who you're impacting. But the fact that you donated, you know that you're building a connection with somebody and helping somebody else who needs it. And because of that, you feel a lot more motivated to chase your goals. So it gives you 2 goals. It gives you the motivation to make more money so you can donate more and give more. And it also gives you this feeling of pride and ecstasy that you're able to share with other people. And it's an absolutely beautiful thing. And so that's my goal. So the next time I get up to a certain level, I think 250,000 is going to be the next time that I donate money, and at least donate a lot of money, I should say. Well, when that day comes, I'm going to be super happy to share it with people, to share my money, to share my successes, make sure other people are okay in their lives. And this also motivates me to get to my next goal, which is going to be 500 grand after that. After 500 grand, right, you guys get the idea. And so donating money can be a really good thing to motivate you and to do some good in the world as you build that portfolio up. Don't worry about it too much when you're just starting out. Probably don't donate when you're first starting out if you're in a bad position, right? Try to build up some money so that you can first be stable yourself, because you need to focus on yourself before you can focus on others. But guys, with that being said, I really hope you enjoyed this video. This was a great quick video on my 5 biggest positions, why I like them, a quick review on my portfolio. Then we went over 3 tips and we went over my goals for the future. So guys, with that being said, if you appreciate, please drop a like down below, hit the subscribe button and the notification bell, and please comment as well. What do you think about my goals? What do you think about my tips? Do you agree? Disagree? Do we want to have a debate? I don't care. I love talking with you guys, so please comment down below. Guys, have a great day, and I'll see you guys later. It's been BK. Bye-bye.